Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel. Many subscribers asked me to make a stock analysis video about Palantir stock because Palantir stock dropped as much as 47% from the recent peak on January 27th this year to now. Personally, I want to find out if Palantir stock is a great long-term growth stock or is it just a hype. Also, many people ask, is Palantir stock undervalued now? Is Palantir stock still a buy? What is Palantir's long-term growth prospect and what are the risks we should know about? I'm going to answer these questions in this video and cover these topics. First, I'm going to talk about what is Palantir's business model. Then I will talk about what is Palantir's long-term growth prospect. After that, I will talk about what are Palantir's 4 major risks we should know about. What is Palantir's fair intrinsic value per share, so you will know whether Palantir is currently overvalued, fairly valued, or undervalued right now. Then at the end of the video, I will talk about am I buying Palantir stock. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos a week that will help you become a great investor. Also, if you like this channel and want to support it, become a supporter in my Patreon blog. You'll be able to download the latest intrinsic value calculator to find out if a stock is currently overvalued, fairly valued, or undervalued. You will also see all the stocks I am buying, selling, and holding for the long term. The link is in the video description. Check it out. Let's start. So what is Palantir's business model? Palantir is a data analytics software company that sells software platforms to government agencies in the defense and intelligence sectors. Palantir also makes data analytics softwares for commercial businesses. The company earns software subscription revenues from 2 main software platforms, Palantir Gotham for government agencies and Palantir Foundry for commercial clients. Now, Palantir has a third platform called Apollo that supports its Gotham and Foundry software as a service SaaS platforms. Palantir also does consulting and maintaining services for its customers. Here's a brief history about Palantir's business. The company was started in 2003 to build an analytics software to counter terrorism. In 2008, Palantir released its Gotham software for US agencies in the intelligence sectors. Gotham lets users identify hidden patterns within datasets. For example, US defense agencies use Palantir Gotham to identify potential threats and to protect soldiers from explosive devices. Now, Palantir Gotham is used by many government agencies in the US, including the CIA, Department of Defense, police departments, and the US Immigration and Customs Enforcement Agency. Many US allies also use Palantir's software platforms. In 2016, Palantir released its second data analytics software called Foundry for its commercial customers. Foundry works as a central operating system to manage, to integrate, and to analyze customer data while getting rid of data silos between different departments and businesses. Palantir is expanding to different industries including energy, transportation, financial services, and healthcare services. If you look at this revenue breakdown here, you can see Palantir is earning most of its revenues from government customers. For example, in the most recent Q1 2021 quarter, 61% of total revenue came from government customers, 39% came from commercial customers, 58% of total revenues came from customers in the US, and the rest 42% came from customers outside of US. The company has a very high gross margin. For example, in the latest March 31, 2021 quarter, Palantir's gross margin was 78%, which is very common for a software as a service company. Palantir is a growth company and has high revenue growth each quarter. For example, in the recent Q1 2021 quarter, its total revenue grew 41% year over year. Its government business grew 76% year over year, and its commercial business grew 19% year over year. However, Palantir has not made any GAAP profit yet. In the most recent Q1 quarter, Palantir's net loss was $123.5 million, which is higher than the net loss of $54.3 million from the same quarter last year. The company has 2 main revenue drivers. First, the number of government and commercial customers each quarter, and second, the average revenue per customer. So in Q1 this year, Palantir had 149 customers compared with 131 customers in the same quarter last year. Average revenue per customer was $8.1 million, up 29% compared with the same period last year. Average revenue per top 20 customers were $36.1 million, up 34% compared with the same period last year. You may want to know this in terms of company ownership and voting power. Palantir's founders, Stephen Cohen, CEO Alexander Karp, and Peter Thiel own Class F shares that give them up to 49.99% of the total voting power. This means they have have substantial control over the company's future. Retail investors have little control over the company's future. Now let's talk about Palantir's long-term growth prospects before we talk about the company's risk. I want to show you management's outlook first. So for Q2 2021, Palantir's revenue is expected to grow 43% year over year to 360 million. Management is raising Palantir's full year 2021's adjusted free cash flow to 150 million or more. Management expects Palantir's long-term annual revenue growth will be 30% or greater for 2021 through 2025. So according to the latest earnings call, management is aiming to achieve in excess of 4 billion in revenue by 2025. In comparison, Palantir had a total revenue of 1.2 billion in the past 4 quarters. An annual revenue growth rate of 30% or higher between 2021 and 2025 is actually very common for a software as a service company that's still in the early growth stage. Management is very optimistic about the company's revenue growth throughout 2021 to 2025. Management said this in the recent earnings call, where the government response to the pandemic has been efficacious. We are seeing a commercial tailwind. In the US in particular, we continue to generate exceptional results, where revenue grew 83% in the US government and 72% in commercial. And we have a lot of headroom for growth in these markets. We only have a handful of Fortune 500 customers and less than 0.1% of annual defense spending. We have widened and are continuing to widen our capability to distribute our product. We see strength in forward-looking indicators and customer interest. Since the beginning of February, qualified commercial opportunities in the US and the UK are up 2.5 times. Active commercial pilots across the business have more than doubled, and opportunities across the US and UK government continue to develop at pace. Now, many investors are very bullish on Palantir because Palantir has a lot of growth potential in the commercial business in addition to its government business. Palantir's management said the company is only working with a handful of Fortune 500 companies and is now expanding to medium-sized businesses. Also, management said Palantir's government revenue is only less than 10 basis points, less than 0.1% of US defense spending. In terms of total addressable market, management believes the company's total addressable market is approximately 119 billion from both government and commercial customers. According to this market research article here, data analytics market is expected to hit $132.9 billion by 2026. North America's data analytics market is projected to grow at a compound annual growth rate CAGR of 26.4%. I mentioned this earlier before. In comparison, Palantir's total revenue was 1.2 billion in the past 4 quarters. Management said in the recent earnings call, we are focused on generating in excess of 4 billion in revenue in 2025. All this suggests that Palantir has a large growth potential in both its government and commercial businesses. Again, management expects Palantir's annual revenue growth rate will be 30% or higher for 2021 and through 2025. This is my opinion. I think it's important to be as objective as possible when we try to forecast Palantir's growth potential. Now, many investors believe Palantir will become a mega cap company. A mega cap company means that its market cap is above 200 billion. If we look at Palantir's total addressable market of approximately 119 billion, Palantir reaching 200 billion market cap, in my opinion, will not make sense right now. Later on in this video, I will show you how I calculate Palantir's fair interest value per share and as a whole company. Now let's talk about the risk before we talk about Palantir's fair interest value per share. The first risk is the company's political stance. Here is one interesting thing about Palantir's business and its political stance to support the US. Palantir's biggest customers are US government agencies, especially in the intelligence and defense sectors. Many tech companies increase their growth by expanding their businesses to China, but Palantir specifically said this: we do not work with the Chinese Communist Party and have chosen not to host our platforms in China, which may limit our growth prospects. Our leadership believes that working with the Chinese Communist Party is inconsistent with our culture and mission. We do not consider any sales opportunities with the Chinese Communist Party, do not host our platforms in China, and impose limitations on access to our platforms in China in order to protect our intellectual property, to promote respect for and defend privacy and civil liberties protections, and to promote data security. This simply means that Palantir is committed not working with the Chinese government and does not intend to expand to the Chinese market. As far as I know, Palantir's political stand is to work closely with the US government and to make sure US will always stay ahead in the intelligence and the defense sectors ahead of China. The second risk is related to the first risk I just mentioned, Palantir's biggest customers are the US government agencies. Management said Palantir's main competitor is actually its customers because customers can decide to develop their own data analytics software platform in-house or to invest in Palantir's Gotham or Foundry platforms. So if Palantir's largest customers, including the US government agencies, whether it's Department of Defense, police departments, or the US Immigration and Customs Enforcement, decide to develop their analytics platforms internally instead of buying from Palantir, then it will have a huge impact on Palantir's revenue. The third risk is that Palantir deals with a massive amount of very sensitive personal data and many classified government operations. This is from the recent quarterly report. We have contrasts with governments that involve classified programs which may limit investor insight into portions of our business. We derive a portion of our revenue from programs with governments and government agencies that are subject to security restrictions. We are limited in our ability to provide specific information about these classified programs, their risks, or any disputes or claims relating to such programs. As a result, investors have less insight into our classified programs than our other businesses, and therefore less ability to fully evaluate the risk related to our classified business or our business overall. This means that Palantir cannot be very transparent about its businesses, especially its classified government operations, to investors, because many of its businesses are related to counterterrorism, US intelligence and defense, US immigration, and many other classified government activities. The fourth risk is that Palantir has not made GAAP profit yet, even though the company has been around since 2003. Now, this is from the recent quarterly report. Since our inception, we have primarily generated negative cash flows from operations and have financed our operations primarily through the sale of our equity securities, including proceeds from option exercises and payments received from our customers. Palantir has a very high revenue growth, but it does not have GAAP profits yet because the company is still in the early growth stage. For example, I mentioned this earlier before in the recent Q1 2021 report, Palantir's net loss was $123.5 million, which is higher than the net loss of $54.3 million from the same quarter last year. Here's the important part we should be aware of. In the recent Q1 quarter, Palantir reported an adjusted operating income of $117 million and an adjusted free cash flow of $151 million. But we should also look at the very small notes at the bottom. Adjusted operating income and adjusted free cash flow are non-GAAP measurements. They do not include employee expenses such as stock-based compensations and payroll taxes. In my opinion, I believe it's more accurate to look at Palantir's GAAP loss from operations instead of Palantir's non-GAAP adjusted operating income and adjusted free cash flow. In terms of share dilution, if you look at Palantir's recent cash flow statement, you will see there was a huge jump in proceeds from the exercise of common stock options in Q1 this year. Also, there was a huge jump in shares issued and outstanding between the recent quarter ended on March 31st, 2021 and the quarter ended on December 31st, 2020. In my opinion, this is not good for existing shareholders because all these new shares issued and stock-based compensations will cause large dilutions for existing shareholders. I think this is one of the main reasons Palantir stock dropped a lot recently. Let's talk about Palantir's fair intrinsic value, so you will know when Palantir stock is undervalued, fairly valued, or overvalued. Now, if you want to download this intrinsic value calculator here, you can download it in my Patreon blog. The link is in the video description. First, I define Palantir's intrinsic value as its future cash flow discounted to the present day. Here are the key assumptions I'm making. The discount rate is 11%. This is higher than the 8.3% WACC rate from Finbox because I believe Palantir has more risk. Palantir's adjusted free cash flow was $151 million in Q1. If we analyze this, Palantir's full year 2021 adjusted free cash flow should be around $600 million. We're assuming Palantir's free cash flow will grow at a rate that is similar to its expected annual revenue growth rate. We're assuming Palantir's adjusted free cash flow will grow between 30% and 50% each year between now and 2025. Now, to calculate the terminal value at the end of year 5, we are using the average of both the perpetual growth model and the exit multiple model to estimate the company's terminal value. Now, let's go over each of these case scenarios, the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a compound annual growth rate of 30% each year over the next 5 years. If we project Palantir's adjusted free cash flow to the next 5 years and then discount it to the present day, then Palantir's intrinsic value as a whole company should be around $29.17 billion. And if we divide this by the shares outstanding, the intrinsic value per share should be around $15.54 per share, compared with the current stock price of $20.75 per share and $38.94 billion market cap as of May 21, 2021. Under the normal case scenario, we're using a compound annual annual growth rate of 40%. If we project Palantir's adjusted free cash flow to the next 5 years and then discount it to the present day, then the company's intrinsic value should be around $38.65 billion as a whole company. And if we divide this by the shares outstanding, its intrinsic value should be around $20.59 per share. This compared to the current stock price of $20.75 per share and $38.94 billion market cap as of May 21st, 2021. Under the best case scenario, we're using a compound annual growth rate of 50% each year. If we project Palantir's adjusted free cash flow to the next 5 years and then discount it to the present day, Palantir's intrinsic value as a whole company should be around $50.35 billion. And if we divide this by the shares outstanding, Palantir's intrinsic value per share should be around $26.83 per share. This is compared to Palantir's stock price of $20.75 per share and its $38.94 billion market cap as of May 21st, 2021. This is my opinion. If Palantir's adjusted free cash flow can grow at a 40% CAGR rate each year over the next 5 years, I believe Palantir's fair intrinsic value should be around $38.65 billion as a whole company, or $20.59 per share. Of course, if Palantir's future cash flow growth is higher, then its fair intrinsic value will also be higher. So am I buying Palantir stock? The answer is no. I'm not planning to buy Palantir stock. I don't have any positions in it right now. This is just my opinion and my own personal preference. I think there are many other growth companies that are much more established with increasing GAAP earnings and free cash flow growth with lower risk compared with Palantir. Now, if Palantir's adjusted free cash flow will grow at a 40% CAGR between now and 2025, I believe Palantir's fair intrinsic value is around $38.65 billion as a whole company, or $20.59 per share. Also, I believe it's important to invest only when the stock is undervalued, so there will be a good margin of safety to reduce risk. Now, all these are only my opinions and my analysis based on my research. Make sure to always do your research first and do your extra due diligence. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, become a supporter in my Patreon blog. You will be able to download the latest intrinsic value calculator to find out if a stock is currently overvalued, fairly valued, or undervalued. You will also see all the stocks I am buying, selling, and holding for the long term. The link is in the video description. Thank you for watching this video. This is Victor from the Intelligent Investor channel. I will see you in my next video.